in our flagship strategy, which is ARKK, Tesla is our largest holding. But if you look at ARKQ, which is our autonomous technology and robotics strategy, we also own other names like BYD in China and XPeng and a little NIO as well. Now, why do we think EVs are the place to be? Well, we are analyzing battery technology, but more important, drivetrain technology, which includes batteries. And if you look at the cost curves associated with drivetrains, what you'll see is that for every cumulative doubling in the number of electric vehicles produced and sold, costs decline by roughly 28%. And it seems as though already the total cost of ownership of an electric vehicle is lower than that of a gas-powered vehicle, which means, which helps us understand why last year electric vehicle sales globally were up, I believe it was 62 or 64%, while gas-powered vehicles were down about 7% globally. So the electric vehicle shift is underway. Consumers want electric vehicles, a total cost of ownership cheaper. So last year, there were 7.7 million electric vehicles sold around the world. We think that number is going to 60 million in the next 5 years. Now, the consensus estimate is that it's going to only 20 million. So there's still a big gap between where we are and where the consensus view is. That 60 million, we believe, will account for 75% roughly of all vehicles sold in 5 years. So electric vehicles, very important. Now, many people focused on Asia say, wait a minute, BYD is winning here. And if you look at last year's sales, BYD's sales, if you look at hybrids and battery electric vehicles, they were up 211% to roughly 1.8 million units, whereas Tesla's vehicle sales were only up 40%. And so the question from Asia is, well, isn't BYD ahead of the game here? You might say yes, based on those statistics. But if you take out hybrid vehicles, and we think hybrid is going away. Hybrid is two systems in one, much more complicated, much more costly. And you look on that basis, BYD's pure battery electric vehicle sales last year were 900,000, whereas Tesla's were 1.4 million around the world. But electric is not the whole story here. In fact, from our point of view, when it comes to Tesla, their autonomous strategy, autonomous taxi platforms, is much more important than their electric vehicle strategy. In our view, our $1,500 price target for Tesla, it's a little over $200 now, but our $1,500 price target in 5 years is 2/3 because of autonomous. And when we listen to BYD, we do not hear autonomous as a strategy. We hear it more with XPeng, but again, they, from a unit volume point of view, are far behind BYD and Tesla. So that's how we're looking at the world right now. I think when you're talking about electric vehicles, you're not talking just about the drivetrain strategies. I think the companies that are going to win, as I mentioned before, are not focused only on electric. They're focused on autonomous, which means they are focused on 3 of our major innovation platforms. First, robotics. Autonomous vehicles are robots. Second, energy storage. They will be electric because the total cost of ownership now for vehicles is lower for electric than gas-powered. And 3, artificial intelligence. So these are 3 major platforms. Artificial intelligence will power these autonomous electric vehicles. And we believe that Tesla, from a thought leadership point of view, is leading the charge, so to speak, in this movement towards autonomous electric vehicles. And just in terms of your fragmentation point, the $5,000 vehicles, if you look at the range and performance of those vehicles, there's no comparison to a Tesla Model 3. The range is very limited. The power is very limited. So you really do have to adjust when you're talking about price for range and performance, which is what we do. And I do believe that Tesla has, for a given price, the best range and performance of any car on the market today. One of the things I could say, David, sorry.
Go ahead.
That we're not just talking about battery technology, drive trains, when we're talking about autonomous. We're talking, as I mentioned before, about robots, energy storage, artificial intelligence, and we're talking about software as a service. So over-the-air software updates. I bought my first Model 3 in 2018. I have never taken it in for service. I have never been to any station. I don't have to go to a gas station. So think about that, how much in the way of costs and convenience I have been saved over these last 5 years. The most important variable, we believe, in this new AI age is proprietary data. And I think if we're looking for killer apps, a lot of people are trying to compare this to the early days of the internet. And we didn't know during the early days of the internet that it was the apps on top of the internet that were going to garner all of the economics, the social networks, of course. And today what we believe people are missing is that the big winners are going to be those companies that not only have the right AI expertise, but also have the right domain expertise. If you talk about life sciences and multiomics, DNA, RNA, proteins, methylation, you've got to have domain expertise and understand that. But even beyond that, you have to have your own data. So we think that AI is going to cause one of the most profound productivity increases in the history of the world. And so you have to, as you're looking at investing, you must look at companies and how they're harnessing AI to lower their cost structures. That's the first killer app. And the other companies that have proprietary data, like Tesla, we'll go back to Tesla. It has collected over the last 5 to 7 years the highest number of real world driving miles in the world. In fact, it has probably collected more miles by an order of magnitude than all of the other auto and tech companies around the world. And that's why we think it is in the pole position to develop and win at the autonomous taxi platform strategy. The first company to get from point A to point B most safely and quickly is probably going to win. So we're looking at a lot of winner-take-most opportunities in this new AI world. And the winner-take-most, as I mentioned before, is based on bringing in the right AI expertise, the right domain expertise for your own businesses, and the highest quality and biggest pools of data upon which to train AI.